Interest rates. They're on every Canadian's mind right now. Are they going to go down? Are they going to go up? And if they are, when's that going to happen? And there seems to be one individual, that's the Bank of Canada's governor, Tiff Macklem, that controls the benchmark interest rate that's driving everything from the rate you get on your GICs to what you're going to pay for your mortgage or your line of credit, or so it may seem. Well, the truth is that there are over 2,000 people working at the Bank of Canada supporting not just interest rate decisions, but a lot more. And today, we'll get into how these rate decisions get made and also what other role the Bank of Canada has, some which we might take for granted. So to help us with that, I've invited Carolyn Kwan. Carolyn is a portfolio manager and partner at Connor, Clark & Lunn Investment Management, who manage the Steadyhand Income Fund, which has a great long-term record as an income-oriented fund. And Carolyn is a big consumer of the Bank of Canada's policy statements and research, but she also worked at the Bank of Canada for many years and many years ago. Thanks for doing this, Carolyn.
Thank you, Salman. It's a pleasure to be here.
Well, Carolyn, let's start with the big picture. What are these 2,000 plus people doing at the Bank of Canada day to day?
Well, they have a very busy job. The Bank of Canada is our country's central bank. What is that? Well, it's an institution that manages the country's monetary policy. And so these policies are ones that will affect the supply of money and the supply of credit in the economy. So for that, the Bank of Canada actually does a number of different things. So the first one, and most directly, is manage monetary policy. So what is the direction of interest rates that they're going to take in the next little while? Another one is the Canadian dollar. And the Bank of Canada does not directly manage the Canadian dollar, but the policies that they influence do have an effect on the level of where our dollar is relative to others. There's also the assistance in managing the financial system, so things such as clearing systems and settlement systems. And then they also help to manage the Government of Canada's own funds, things like the debt management strategy, as well as our foreign exchange reserves. And a new, more recent role that the Bank of Canada has taken on is the supervising of our payment service providers. So when you or I pay for something, we do things like electronic funds transfers, or we have digital wallets. Well, the Bank of Canada is now going to have a supervisory role in that.
So it's not just interest rates, clearly, that the Bank of Canada is looking at. So what did you do at the Bank of Canada when you worked there?
Well, I worked in the research department. In fact, Governor Macklem was part of the research department back then as well. And part of what we did was, in fact, trying to make sure that we had a very clear understanding of what was happening in the Canadian economy in order to set interest rates properly.
So you've got some dirt on Governor Macklem that we will talk offline. So obviously, interest rates are on everyone's mind right now. One of their big roles, Bank of Canada's big roles, is interest rates. Let's talk about how interest rates impact the economy, because we certainly hear about interest rates all the time. Bank of Canada has been raising them. They previously lowered them. Why would they try to manage these interest rates? What impact do they expect it to have on the economy?
Yeah, interest rates are, in fact, a very big factor in all of our lives. It really touches all parts of the economy. So the government sector, businesses, as well as each one of us as borrowers or consumers. So if you think about borrowing, for example, it's a very topical thing. Many of us now are either we have mortgages, we're thinking about buying a home. The question of where interest rates are going is actually extremely important today. And then when you think about it as being a saver, interest rates play a role in determining how much we can get paid for socking away some of our money, whether we're in a savings account, a GIC, term deposit, or investing in bonds. And so the Bank of Canada ultimately, what they're trying to do is to manage inflation in a way that effectively can create some stability for Canadians. And what they do is try to ensure that the economy is operating and functioning at its capacity, but not beyond its capacity. And the reason is because when the economy operates in excess or in beyond its capacity, it leads to prices rising. And inflation is not a good thing. Inflation, in fact, is bad because it implies a loss of purchasing power. And you can think about it as, if you have $1 today, it'll be worth less a year from now. And it's actually quite visible today when you think about going out to buy something. The prices we're paying today versus what we recall them being, 3 or 5 years ago has actually changed quite materially. And this can be especially difficult and challenging for those who are, for instance, not working, who are retirees, those that may not have indexed pensions, for example. And so those are, people who are going to be badly affected by inflation. But it also has some more unseen effects, I guess. It generates instability in the economy. It actually creates uncertainty and makes it difficult for each one of us ultimately to make decisions as a consumer, as a business owner. These are things that actually become a lot more challenging when you have to factor in not just all the other things that you have to deal with, but also the effect of inflation. So that's the Bank of Canada's real function there, is to try to create a stable and predictable environment for Canadians.
And so, if I understand it right, then by manipulating interest rates, and manipulating is not the right word, but by adjusting interest rates, they're hoping to affect our behavior as consumers, and not just our behavior, but the behavior of businesses, whether how much they're going to buy or what they're going to do with their savings. Is that a fair thing to say?
That's exactly right. In business terms, it could be how much they decide to invest, whether they decide to take on a big project, how much inventories do they carry. All of these things are affected by things such as how much do they have to pay for it today versus how much do they think they can sell it for in the future.
And a couple of years ago, if I recall correctly, and there was an announcement that the Bank of Canada's mandate was going to be adjusted a little bit. It wasn't, it's still going to be inflation focused, but there were going to be some other things added to it. Can you just expand on what that adjustment was, and maybe even contrast that with how other central banks around the world might be working as well?
Yes, definitely. So the Bank of Canada, what they do is every 5 years, they look to ensure that what they are working on, what they're doing, is in fact the best that they can for Canadians. And so what they do is put an explicit mandate out, and that process is done every 5 years. And as you said, the last one was enacted in 2022. And they had made some minor changes, but effectively, the Bank of Canada has one mandate, and that is to target inflation and bring it to 2% and maintain that at a stable and predictable level. What they amended in the language in 2022 was not quite to approach what you may have heard of in the news as a dual mandate. These are words that you may have understood or heard from other central banks that use it. It's familiar to us because, in fact, they do that in the United States. The U.S. Federal Reserve has a dual mandate where they explicitly target both inflation as well as maximize employment. And that implies that monetary policy is working to optimize both of these at the same time. And so there could, in fact, be periods of trade-offs. In order to, for example, fight inflation, you may actually have to have a rise in unemployment. So these are things that the U.S. Federal Reserve deals with. And in fact, today, it's actually a good example of what they're planning or dealing with at the moment. Inflation, by some measures, has actually come down to 2%. By other measures, it's actually still above 2.5%, 3%. But what they're planning to do is actually reduce interest rates this year in order to try to prevent a rise in unemployment. So that language we talked about is a little bit familiar to Canadians because of that dual mandate in the United States. There are many other central banks that do that as well. The Federal Reserve Bank of New Zealand and Australia both engage in dual mandates. Here in Canada, though, our sole target is inflation. What they did in 2022, though, was to make it clear that the purpose of inflation is the purpose of the inflation target is to keep inflation predictable and low, but also to provide the best environment to create maximum sustainable employment. So they included that language about employment, but not in an explicit target sense.
It's not explicit that they're going to try to maximize employment, but they have to consider it in their policy decisions. Right?
Exactly, that's right.
So let's talk about that 5-year plan that the Bank of Canada puts out. Do they take any cues from the government? Because we hear about Bank of Canada's independence from, sometimes call it a question, sometimes politicians make a big deal about it. So just explain that to us. How does it, is there any government involvement in that 5-year plan, or is it really doing that on its own?
Yes, the Bank of Canada and the Department of Finance do work together on some things. And in fact, the 5-year plan is one of those. But I think it's important maybe to take a step back here. The Bank of Canada, in fact, is an independent crown corporation. And I think that's something that's quite critical to understand. They do not take cues from the federal government, from the Prime Minister, and in fact has deliberately set its governing structure up over a period that differs from our political process. So, for instance, the governor is appointed by the Bank of Canada's board of directors, not by the Prime Minister, not by the Minister of Finance. And the governor has a 7-year term. Again, this is a different cycle than our federal elections, for instance. And the purpose of that is to minimize any potential political influence on policy decisions. But does it take its cues from the government? I think where it is relevant is that the Bank of Canada and the Department of Finance do come together to understand and review the policy framework every 5 years. And this is the inflation targeting framework that we just talked about. So that is something that they do work together on to ensure that it does meet the needs of Canadians. But I think also it's worth acknowledging that really over the last few years, as we've gone through a number of these important crises, the fiscal policy that has come to pass, the management of inflation, and the role that fiscal policy has played in managing, the Department of Finance and the Bank of Canada actually have kept up strong communication. And it's not really to direct the Bank of Canada to do anything, but really certainly to try to keep information flow and flowing and to work together and hopefully not be at odds with each other.
Why would we want that? Why would we want independence for the Bank of Canada?
Yeah, that's actually a very critical point. I think to put it in its simplest terms, having an independent central bank separates the power to spend money, which is fiscal policy. That power resides with the federal government. The purpose is to separate the ability to spend money from the ability to create money, which is what the Bank of Canada's toolkit allows them to do. So that separation is actually quite critical.
Yeah, that makes sense. So you obviously consume a lot of what the Bank of Canada puts out. How do you use all this stuff that the Bank of Canada is putting out, seemingly every day? Almost, it seems like there's some new piece of information. Sometimes it's research, sometimes it's policy directives, sometimes it's just thought and stats. How do you incorporate that into some of your decision making?
Yes, we are very much big consumers of the Bank of Canada, their research and their statements. We work here to manage bond portfolios for our clients as well as for your clients. And we take everything the Bank of Canada that they say into account. What they do and how they decide whether to raise or lower interest rates or keep them the same, it matters. It matters because it changes interest rates across the different terms, across the different types of bonds that exist, not just for the Government of Canada bonds, but also for all the other different types of bonds that exist, those that are issued by provinces, those that are issued by companies. And so all of these communications, the effort that we place into it is to understand their intentions and to forecast where we think interest rates will go. And that ultimately is intended to help returns in our bond portfolios as well as reduce volatility. And so specifically, we forecast shorter term interest rates, like 2-year interest rates. And we do that by forecasting what the overnight rates that the Bank of Canada controls for the next couple of years. And we take all those forecasts and we create this overall, an overarching assessment of where we think interest rates will go. There's, in fact, a very direct mechanical link between the Bank of Canada's overnight rates and where interest rates are at the shorter term of the yield curve.
So let's get into that a little bit, which is, what are some of those expectations today? Because it is pretty much every conference or every dinner party I go to, so people are predicting or trying to predict, anyways, where interest rates are going to go. You are experts in this. What is your thought process on this right now?
Well, I think it's become quite clear that we are likely very close or at the end of our rate hiking cycle. And in fact, it is likely that over the next year or so, we are going to see the Bank of Canada cut rates. They have taken interest rates to about 5% today at the overnight rates. That's their policy target rate. And that interest rate is above what current inflation is. It's also higher than we've seen for a number of years. And where we think they're going to end up is to bring those rates down to in line with what a policy rate would be consistent with at 2% inflation. Inflation has been quite high recently. It went as high as 7% in Canada. And as inflation has come down, that has allowed the Bank of Canada to take a bit more of a step back and to assess whether the Canadian economy is in fact operating below or above its capacity. And then as we sort of let monetary policy do its job, let the time come and have that policy rate and the interest rates work their way through the economy, that will then help to allow the Bank of Canada to bring interest rates a bit lower in the latter half of this year. So it's coming, but our estimation is that it is likely not going to come in the next meeting, perhaps not even the meeting after, but sometime later on this year, likely in the summertime.
So you're a professional. Your understanding of what the bank puts out is going to be different from what most people watching this video would. So how should the everyday Canadian use some of the Bank of Canada's resources? Because there are a lot. If you go to the website, there's a ton in there for the investment geeks like you and me. We can spend days on the site. But how should the average Canadian use the Bank of Canada?
Well, there are so many things that we do. We take out a mortgage. We make decisions on where we should save, where we should invest, how to manage your small business. All of these things that we talked about at the beginning, these are all influenced or have an influence based on the direction of interest rates, the currency, et cetera. So I think it is quite important for all of us to listen to the Governing Council. And I think it is critical to say this because the Governing Council does make a concerted effort to ensure that what they do is clear and transparent. So they ensure that their deliberations, their decisions, all of these things that they think about are clearly communicated to Canadians, not just to investment geeks like us, but to everybody. And so I think it is quite worthwhile to understand what they say in their statements, to read the statements, to watch their speeches, to understand where they think interest rates are going, where do they think inflation is going. So that's one, I think, very critical and important aspect, just by virtue of the fact that what they do touches so much of what we do in our daily lives. But there are a few other interesting ways that the Bank of Canada does influence or have resources that we can look at. One of these is actually on unclaimed bank balances. So if any of you watching have a bank account or any of your loved ones have a bank account that you haven't touched in 10 years, these funds moved away from the financial institution and to the Bank of Canada. And you can actually go to their website and search a name and see if there are any unclaimed funds and submit a claim for one if you recognize that. Another important way that the Bank of Canada does touch us, and you referred, Salman, to some of the 2,000 people that are working. There is quite a large department that works on managing the currency of the country. And a lot of work, for instance, goes into anti-counterfeit measures for each of the bills that we use. But they're also doing work on whether there should be a central bank digital currency, a cryptocurrency that may be housed at the Bank of Canada. But also, as you know, we are in February. It's Black History Month. And a few years ago, the Bank of Canada honored Viola Desmond by putting her on our $10 bills. And the Bank of Canada is now today asking for input on who we all think should be on our $5 bills. And so based on our understanding of Canadian history and notable Canadians, they are asking for our input. And that's another way that we can have an impact on things that are part of our culture and our world.
And I'll put in a plug for the Bank of Canada Museum too, which is free to visit. And it's got lots of cool things and cool exhibits in there. And even for future policymakers and future Bank of Canada governors, they've got things in there for elementary and high school students too. So check it out if you're ever in Ottawa. Carolyn, thank you. Thank you very much for for helping viewers understand the different roles of the Bank of Canada and why it's important. And to the viewers, if you found this video helpful, send it to someone else that might find it useful, and subscribe if you're interested in more content like this and on other investment topics like retirement planning and tax credits. Take care. Happy investing.